All right, ladies and gentlemen, we're going to do a quick rundown of 15 of what I believe are the best metrics for alpha on Sanbase right now. And we're going to use Bitcoin as an example. And if you've watched This Week in Crypto, you'll notice that I use this template quite a bit to go over what's been going on lately in the markets. And I'll often kind of breeze over exactly how the metric works and just sort of give you a glimpse of where things are in the markets right now. This is going to be kind of the opposite. We're going to look in depth on how the metrics work, and then just a quick glimpse at what the markets look like now as an example as to how to use the metric. So beginning with volume here, these are three different kinds of volume. I call them all just kind of the same metric. I put them all together because they act in similar ways. Trading volume would be here in gray. Transaction volume is in red, and transaction volume USD is in kind of an orange, light yellow color here. So in short, volume tends to look like this. And UTA traders probably are already quite savvy with this rule, but many of you may not be. When a price direction is moving swiftly, or even not so swiftly, if it's moving in one direction pretty clearly and you start to see transaction volume or trading volume moving up with it, that generally means that the trading crowd is interested in that direction continuing. If they start to show disinterest and you see these bars moving down, that means it's more likely that a direction change is coming. So for example, right here, going all the way back to April, we can see there were very, very high transaction volume bars going on as the price was starting to move down, stayed high. We had one little dip here, but you can see it just continued and continued here in May as FOMC data was coming out. And finally, when we get to the bottom, we're starting to see things diminish. It ends up flattening out, flattening out. You can see just how much trading volume and transaction volume is not firing off anymore because flat prices are not what the crowd's interested in. And then as it starts to free fall again, when the next FOMC report comes out, people are very interested in the price continuing to move downward. And you can see, for example, if you're right here on June 13th, and you see a huge volume bar for trading volume and transaction volume, both in Bitcoin and USD, yeah, that would be a sign that the trading crowd is very interested in the price moving downward and they're trading into it. Doesn't mean all these people who are adding volume want the price to go down, but it's causing volume and utility on the network to fire off, and that tends to be what propels the price further in that direction. So you see all of these bars of volume continuing to fire off, and then finally it bottoms out right here. And when things bounce, you'll notice there isn't nearly as much trading volume. People are not really interested in this move up in nearly the way they were when the price was moving down. A lot of people were scared, as often is the case when you see a huge plummet. People kind of freeze up and they don't want to trade either way until it's clear what's going to happen next. So sure enough, this is kind of a dead cat bounce. It doesn't really bounce up far at all. We have further downside, and you start to see a pattern of gradual trading volume moving up over time, or I should say more on-chain transaction volume moving up. Um, and it kind of just leveled out. But the most obvious pattern, I think, right now is that both on-chain volume and trading volume is kind of moving in a downward direction right now. Yeah, there's a few anomalies, but overall, the trend of flatness is not very appealing to people, which is often the case. I would call this kind of a slight downward trend, though, which, the price has kind of been in all year long. So the fact that the crowd is less interested in the long-term downward trend than they have been in a long time, that adds to the argument that we could see some sort of bounce in the near future. And then if there's a lot of volume that comes in with that bounce, you've got yourself a potential short, medium, or even long-term rally coming up. but that's a big if. And as I always say on our calls, nothing I say here is to be considered investment advice. We're using Bitcoin as an example and just looking at a brief glimpse at where we're at now to give some context. Next up, so this is two metrics combined into one. Metric number 2 and metric number 3. Daily active addresses is the amount of unique addresses interacting on the Bitcoin network at any given time, and circulation is the amount of unique tokens that are moving on a day-to-day basis. So in other words, when you say unique tokens, you're not talking about the same token moving multiple times via a wash trade or something like that. You're talking about each token, whether it's moved once or 30 times in a given day, it's only being counted as once. So it gives a very good glimpse at the true health of how much the entire supply of Bitcoin is moving on a given day. As we can see, utility is the name of the game, just as we saw with volume. I'm going to back out a little because we can get some better context looking at a couple of years. Check out how daily active addresses tends to move up, just like with volume, into bull rallies. And it's more of a validator than anything. If you're seeing big bull rallies happening like here in November 21 when we hit our new true all-time high, we kind of topped out here at the end of October and it was already just starting to move down. That would be a bit of a bearish divergence. But if it's continuing to move up, this is a 30-day trend line, by the way. If it's continuing to move up, that's a sign that the prices that are moving up have some validation to them because the amount of utility is increasing as price is increasing. So it's justifying that market cap rise. Circulation, basically the same thing. You want to see circulation rise over time to justify that prices and market caps can continue to increase. If they're starting to fall, like we're really starting to see circulation do lately, that's a bit of a concern. We have an NVT model, which I won't show for this video, but you can check it out, and it actually shows the divergence between the current market cap and how much circulation it's getting. And typically, if circulation is moving down while price is staying flat, that means it's starting to get a bearish divergence. So daily active addresses has looked so-so throughout the last year. Circulation, not so much. It's looking concerning because there's a serious lack of coins that are actually circulating on a daily basis right now. Next up, MVRV. So we have the 30-day and the 365-day MVRV here. This shows the average trading returns of short midterm traders and long-term traders over time. Generally, the lower MVRV is, the more likely or probable a price can rise over time. If it's really high, that means that the average trader is way overheated. As we can see here, if you look at the left bubble, like at one point it actually gets above 100%. This was right at a local top before it corrected down. You can see right here, the long term then goes down to about 62, 63%, and the shorter term MVRV is actually negative. So long story short, if you don't want to get into the technicals, when MVRV is low on the short or mid or long term levels, that's when it's more probable for prices to rise because crypto trading, just like anything else, is a zero-sum game. You have some winners and some losers at all times. Not everyone is rooting for Lambos and moon emojis at all times. And there's actively people who are shorting, people who are selling at the top, people who are selling at the bottom, all sorts of things. And this averages them all together and shows you when there's the most pain, like we saw here in mid-June. And where are we now? We're still in a huge pain point on the long term, and we're almost exactly dead even on the 30-day scale. So that would tell us that it's a better prospect than usual to add to your positions or enter a new position right now, but certainly anything can happen. And ideally, we like seeing both the 30 and 365-day MVRV in the negative territory like we saw on this bottom and on this bottom and on this bottom. Next up, funding rate. I'm going to zoom way in on this one just to the last week because this is a more granular one. we're looking at just the 8 hour and the 1 hour funding rates. We combine exchanges for Binance, FTX, Deribit, DYDX, and Bitfinex. And generally, it works the same way as MVRV. When you see the funding rate starting to get high, this essentially means that the ratio between people longing, betting for the market, and people shorting, betting against the market, are favoring longs. And vice versa, when you see it down here, it means that there's a higher ratio of people betting against the markets and they're favoring shorts. So generally, when you see shorts, it means there's an added likelihood of short liquidations that can occur that can actually propel prices upwards. Same thing on the high end. If there's too many longs, you can see that it tends to push prices down. Now I'm going to zoom out to the last year again. And this is a ton of noise in the spikes, I get it. But for the most part, I'll just show the 8-hour funding rate. You can see when it's way up high right here, people are getting very greedy. This was right at the all-time high back in November 2021. A lot of long liquidations happened as price moved down. Now, there haven't been as many situations where people have shorted and gotten liquidated. I'm sure if I zoomed in, I could find many. But if we zoom in, if we go back to like we'll do like 2019 to 2020. It doesn't even go that far back. Let's try 2020 to 2021. There we go. So yeah, check out when all the shorting, this is very, very clear. All the shorting was going on in mid 2021 as people were expecting prices to really drop down after the then April all-time high happened. And look at all the euphoria as people were trying to long Bitcoin right when it was at the topping point. So that tells you everything you need to know. Longs, price went down. Shorts, price went up. Longs, price eventually went down. Shorts, price went up. Like it's like clockwork there when you look at it back in 2020 and 2021. So really good metric to keep an eye on, both the 1 and 8-hour funding rates. But as of now, it's about dead even for both. There's nothing really extreme happening like this. So things can break either way as far as funding rate is concerned. All right, whale transaction count. So we have here both the $100,000 plus amount of transactions and the $1 million plus amount of transactions. And in short, it's more of a volatility indicator than anything. There's a few metrics like this, and we'll touch on a few others. When you see spikes for whale transaction count, like right here, this was the largest 100K plus transaction count line in the last 2 years, and it happened right at the local top. So if you wanted a clear-cut look at where whales were taking profit, it literally happened right on the nose on January 6th and 7th or so. And this would have told you that this rally may be coming to a little bit of a halt. Obviously, it didn't last forever. We actually saw whales very disinterested near the bottom, and you can see the big gap right there. But for the most part, they work more around tops. And you can see that this was a perfect top signal. This was a very good top signal. You can see when they're spiking. And then this one here, you look at how the $1 million plus ones really fired into action at the April all-time high at that point. On the flip side, if you're looking for bottom signals, there can be a few. You know, you can see the $1 million one here standing out a little bit, showing there's some accumulation happening. And this might even be argued to be an accumulation. You can compare it to our supply distribution metric that's coming up. But for the most part, rising whales over time, that can mean anything. It doesn't necessarily mean prices are going up or down. It simply means there's a lot of interest in profit taking or bottom buying opportunities by the whales. And you can see just how many right now are going on. Take it back, sorry, this is only going to 2021, so no wonder. This was all profit taking right before the early November all-time high. And you can see all the whales really taking profit at the October then all-time high right before there was one more leg up just above it. But if we look at just like the last 3 months, what do we see? A declining amount of whales, which means they're mostly just stagnant. Not a lot of huge transactions going on compared to historically for Bitcoin right now. And like I said, it doesn't really mean anything for price until you start to see a big spike start to stick out. And that usually only happens when there's a lot of volatility in prices sliding down for a long period of time or moving up for a long period of time. All right, so now we get into the supply distribution metrics. You can see a whole lot of lines here. And just for the sake of looking at whales for Bitcoin, we'll take a look at the 100 to 1,000 and 1,000 to 10,000 amount of addresses. And I'm also going to add the price of Bitcoin. I'm going to put this in bar form. We'll do one candle per day. Look at the last year, full screen it. So what do we see? We see that the 100 to 1,000 Bitcoin addresses moved way down along with the 1,000 to 10,000 Bitcoin addresses as markets were sliding after the all-time, even before the all-time high. They were already starting to take profit, and there are less and less of these whale address in existence. Then all of a sudden we see this huge spike in Bitcoin addresses that are of the 1,000 to 10,000 variety, and suddenly price actually follows and moves up a little bit. Look at how they started to take profit maybe a week or two before that local top. Sometimes it's not quite this distinct, but overall, it's a very good long-term metric. And you can see, especially starting right here, so the yellow line's moving up, red line's moving down. That can mean anything. But once you start to see both the 100 to 1,000 and 1,000 to 10,000 lines moving down together, yeah, right here would be kind of a red flag around the first week of June, because the price ended up dropping off, and then the 100 1,000 addresses immediately started accumulating, but the 1,000 to 10,000 are moving the other way. So you may say, man, this is a lot of number crunching, figuring out when one is going up and one's going down. Well, we can make it easy and just hit the merge button, click 100 to 1,000, click 1,000 to 10,000, hit confirm, and I'll remove the other lines. And now we've got a nice, easy combination of how many addresses exist between 100 to 10,000 Bitcoin. And overall, the answer is less and less over the last year, which makes sense because price has been hammered over the past year. If I even go back to the last 2 years, yeah, the trend is it's kind of been moving down. There are less of these addresses now versus 2 years ago by a pretty wide margin. If I hold down Shift and I drag over, we can see that there are 206 less addresses than there were 2 years ago. So yeah, we want to look for lines like this. This would have been a very nice sign here in September that Bitcoin has a chance at making an all-time high, because there's a ton of new addresses of these whale sizes that are suddenly popping up on the network. And sure enough, we had the all-time high right before it, and then right between these two all-time highs, that's when they started taking profit. Now, similarly, we can also look at the percentage of supply held. So it's similar to the amount of addresses, but instead you're looking at the actual overall cumulative percentage of supply held by those same addresses. So I'm going to, here, I'll just hold down Control and click on one. That'll get rid of all but one. And then I'll click Merge 100 to 1,000, 1,000 to 10,000, hit Confirm. Get rid of that blue line now. Let's put the price back on this chart. Do the same thing, switch to bars, darken it a bit, and make sure it's 1 day. Perfecto. So yeah, this is arguably a little more accurate than the amount of addresses. And you can see just how on the ball they've been, accumulating starting in October, I think even before October 2020, but for the sake of the past 2 years, They were accumulating, started taking profit right before the then all-time high in April, really started to drop. So if you looked at this drop and the price was still up in the 50Ks, yeah, I'd be a little worried because the whales are taking a ton of profit and dropping a lot of their percentage of supply on the lower tier addresses. Then from here to here, they go on a long accumulation spree. So yeah, this something like this moving up while price is moving down, that's a pretty solid bullish divergence there when there's accumulation as price is moving down by the whales, the key stakeholders that really control where markets move next. And yeah, sure enough, there was a huge rebound in the midst of that accumulation. It eventually got all the way up to the all-time high, just like we saw with the number of addresses. They started dumping in between the October and early November all-time high, and they've been sliding and sliding down ever since. So yeah, this would be considered a not great sign for an upcoming bounce for Bitcoin, and whales are up there as one of the most important things to look at. Ratio of daily on-chain transaction volume and profit to loss. I'll keep this one quick. Let's go last 6 months. And for the sake of helping, I'm going to mark the as close as I can to 1.0. All right, we'll go with 1.003. I think that'll be fine. So anything above this 1.0 line, that means there are more profits being taken than there are lost transactions. So anytime a transaction is happening, what our metric is doing is calculating whether the address is moving that Bitcoin when it is above or below the price that it obtained it. So when it's above, you'll see a lot of profit spikes like this, and those lead to local tops. Not as reliable, but still sometimes you'll see big spikes on the low range like this, or something like that right after it's happening, or even right here. These can sometimes mark local bottoms. I wouldn't put a ton of credence into it though. They're definitely great for marking local tops though, and you'll often see, especially with lower tier assets, you'll see a huge spike in ratio of transaction volume and profit to loss, and that marks a top so many times when the price has been climbing up to that point. So it's another very good profit-taking metric. Mean dollar invested age. This is a measurement of the average age in which coins have been sitting in that wallet. And the higher it goes, that means the more stagnant and dormant the coins have been. The lower it goes, if you start to see a big drop, which we haven't seen here in the last 6 months at least, that would be a sign that a lot of dormant tokens are starting to move, and that lack of stagnancy is often what propels the next bull run. So yeah, this can be a very important long-term metric, and I can prove what a drop looks like since you can't really see any significant one over the last year. But you can see plenty if I go back to 2016. So like back here in October 2016, you're looking at a price of $678 for Bitcoin, the good old days. And the mean dollar invested age line is just dropping off a cliff. And look what happened just up until the mean dollar invested age line stops dropping. So if I go till December 13th, right after it starts to flatten out and go up a little for a second, the price during that time, while the drop was happening, was just a cool plus 2,351% for Bitcoin's price. And then all of a sudden, we saw a local top coincide with the flattening of the mean dollar invested age. When's the next one? Right here, May 1st, 2019. And the price had already been moving up a little bit, but the dormant tokens midway through this mini bull run decided it's time for them to start moving tokens. And just up until the price or mean dollar invested age flattened again, it looks like the price went up exactly double for Bitcoin. It went from what is that? 5402 to 11941. or I guess technically something like 10.8. Whatever I dragged it on, it was exactly 100%. One more example, October 14th, 2020, we suddenly see the beginning of the mean dollar invested age drop. Let's go right up until it flattens and starts moving up again, May 2021. Price went up 283%. In fact, it actually went all the way up to 392% at one point. And then this rebound here, so all the way past April, this rally, some can argue, was a bit of a false one because the dormant tokens were not moving. So yeah, you could have bought precisely right here and the mean dollar invested age would not have predicted it. But you can tell that whenever the top did happen, price would really struggle because dormant tokens were already becoming very stagnant once again. And you can see now the mean dollar invested age has pretty much surpassed anything it's seen over the past 6 years. So where are we now? Yeah, dormant tokens are not really budging much, and that's a scary, scary scene. Moving on, this one I'll keep it quick. Network realized profit loss works similar to MVRV, works similar to ratio of profit to loss. Basically, when you see big spikes on the high side, like we saw right before the then all-time high in December 2017, that means there's a ton of realized profits going on, tons of people profit taking, and this works kind of like a zero-sum game where it's always going to fluctuate around 0%. So a huge spike on the high side means there's too much profit for the network to sustain, and prices have to either drop or you have to see a huge loss like this, but right after this profit spike, otherwise price has to come down to make up for it. But if you do see negative spikes, that can often be exactly when the local bottom is, like right here or right here. And this one, you can argue, was as well. It dropped for like, I think a week after before rising. But either way, if you're keeping a close eye on network realized profit loss and you suddenly see a massive spike, yeah, that's a good sign that you can jump in while there's a ton of realized losses happening, or you can jump out when there's a ton of realized profits happening. So this one works both ways, and it's very, very helpful. Supply and exchange. So this one is kind of a combined one as well. I didn't want to really count it as two metrics. Exchange flow balance tells us when there's a ton of inflows happening. It's basically measuring the difference between the amount of Bitcoin moving onto an exchange and moving off of an exchange. So I should actually make this a filled area line so you can see where the positive and negative line meet. And generally, when there's a lot of outflows, it means there's confidence on the network, and there's also, more importantly, less risk of a future sell-off happening because there's literally less Bitcoin on the exchanges to sell. Vice versa, when you see a ton of coins moving on to exchanges, it can be a sign of another drop. Now, this one was interesting because it kind of happened near a bottom. But I guess not really. It just kind of made it happened at the beginning of a flattening out period for like 4 or 5 months before prices finally rose. And you can see the outflows kind of contributing to that. Um, I don't think this is the best alpha metric, but I do think it's important for the context of whether your asset is safe or not. When you see a coin with sub 10% coins on exchanges, generally pretty good sign. It's pretty hard for a massive enough sell-off to happen to completely crush prices. You can see, in February and March, we were up at 16%, 2020 that is. This was right at Black Thursday. And ever since then, it's dropped, and we're at about half the percentage of Bitcoin on exchanges that we saw, what is it, 2.5 years ago now. So that's a good sign. So these kind of work in tandem. You'll notice when there's a big outflow spike, that's when supply and exchanges drops a lot. When you see a big inflow spike, obviously supply and exchanges just erupts. All right, moving on, we've got just three more here. So another kind of tandem metric, social volume and dominance. Social volume will show you the amount of overall mentions of an asset over time while scraping data from Twitter, Reddit, Discord, Telegram, and pro traders chats. And then social dominance will actually show you the percentage of these social volume bars versus the top 100 market cap assets. Whether the asset is a top 100 market cap asset or not, it doesn't matter. It's basically going to measure what percentage of discussion is related to this coin at any given time, and then calculate how much discussion is happening for the other 99 or 100, depending on whether this is a top 100 asset itself. Um, Generally speaking, they can work both ways. I think Bitcoin's a bit unique to this. Generally, a high social dominance for Bitcoin is always a good thing because it means that the focus is on the number one asset in crypto that essentially makes the rest of the markets churn and is responsible for many trading pairs just alongside stablecoins. Um, so when you see a social dominance, this is kind of a rule of thumb, but you can come up with your own rule of thumb if you want. This is not investment advice, but I like to look at right around 20% as a healthy social dominance for Bitcoin. I'm going to take off social volume here because it's not as important. If you see social dominance way up here, like back in 2017, it was being talked about more than half of all conversations related to top 100 assets. Yeah, this is all looking pretty good. Even with all the volatility, there's so much discussion related to Bitcoin. And it's not really until the beginning of 2021 where you started to see it really significantly fall off and actually go into the negatives. And guess where the all-time high was? Right when people started focusing on Bitcoin and started focusing on altcoins, SH coins, all sorts of coins that do not contribute to the overall growth of the crypto market cap sphere, at least to the extent of Bitcoin right now. You can notice too, social dominance briefly went back above 20% when there was a lot of talk about recessions, FOMC, how Bitcoin relates to equities, stuff like that, and the price actually bounced. And then after the bounce, look at how people started focusing on altcoins again, and the price dropped right back down. Where are we now? Well, let's zoom in. And we can see, I've got to move the line because the axis changed. Here's the 20% line. Yeah, we're still well below it right now. And we've been below it for just about a month now, today being October 24th. So yeah, social dominance for quite a while during this drop has been bad, other than right around this bounce time when social dominance was above 20% for Bitcoin. The price has basically moved down whenever, to a general extent, whenever social dominance has been below 20%. So very useful there. Weighted sentiment. So this is basically looking at the social volume, which we just looked at, and then it multiplies by the ratio of positive versus negative comments on social media. So we're looking at both volume of conversations and what the sentiment is. And when we combine that together, we get a very useful metric, which I can show you better looking at, we'll go back to the last 6 years. Generally, when we have the most negative spikes, like we saw here on Black Thursday, that's when prices rise. When we see the most euphoric spikes, like we saw here temporarily, that's when prices at least temporarily drop. It's a good long-term indicator. You can see it has a lot of noise. It uses its own average to calculate, which is why it's always going to hover around 0%. It's comparing against itself over time. But generally speaking, you want to be in when the sentiment is negative, and you want to be cautious when the sentiment is positive. You'll see plenty of anomalies that disprove that, but I can assure you that weighted sentiment, if you look at it on a week-to-week basis, you'll find some good alpha there. And then finally, development activity. Development activity is essentially telling us what the overall amount of GitHub activity is on the assets network. When there is a lot of development activity, it generally is a validator that the team behind it, whoever's behind Bitcoin or any asset, they actually believe in the asset's future. They believe that it's a viable asset that can help improve the crypto ecosystem or world currency in general. If you see a coin that has like 0 or 1 submissions per day, yeah, that's a little more worrisome, and it could be an indication that there might be a rug pull. And we've seen plenty of coins from the past with almost zero development activity that a lot of people shilled and believed in, only to end up falling off a cliff and uh, ending up being a scam or something like that. So you want to generally see an asset that is moving up in development activity over time. That means it's growing and justifying its market cap growth, assuming it does have market cap growth. Many assets continue developing more and more over time, even if the price is moving down, and that's a good sign too. Um, but either way, this is kind of a validator for your portfolio. Look at each of the assets you're investing in and see if the development activity is staying high, if there's double digits or even triple digits of development activity every day, or whether it's, below 5 or something that could be really concerning. And then look to see if it's rising like this. Some start off with a lot of development activity and then gradually move down and down. And that can be a sign that maybe they're satisfied with their work and they no longer think that the asset's going to, need to be improved. And oftentimes they could change their mind and it could become a rug pull kind of asset. So there's a lot of reasons development activity is important, but yeah, that's essentially the top 15 metrics that we like to look at on a day-to-day basis here at Santiment. I hope this was helpful. Feel free to share it around if you found it useful. Like this video, always helps with the algorithm, even if you find it kind of frivolous. Hit that subscribe button for the same reason. It really means a lot to us, guys, and I wish you all the best. Hope you're surviving this bear market well, and we'll talk to you again on Friday with our next This Week in Crypto stream. Talk to you soon.